Hey, what's going on, everyone? Matthew from therighttrader.com back in with another cryptocurrency and stock market video. Today I'm going to be doing a little analysis for both the S&P 500, a couple other stocks out there, as well as Bitcoin and the cryptocurrency market. We're going to talk about the recent drop because if you look at most stocks as well as cryptocurrencies, we've seen, somewhere between a 5 to 15%, typically 10 to 15% drop in most cases, right? Looking at Bitcoin, down around 5% in the last 7 days, Ethereum down about 11%, and this is a pattern that repeats itself along the crypto market. For stocks, it's fairly similar, right? And keep in mind that stocks and cryptos are actually more correlated than you might think. Every time we think it's different, and that might change in the future, I still think Bitcoin is one of the better assets here all around, specifically Bitcoin though, but it is still linked, right? When stocks fall, which is exactly what happened, right? They peaked out at around 350 on the S&P SPY ETF, and it started pulling back. Well, guess what? The exact same thing happened to cryptos, right? They started falling again. So the general market sentiment, the general financial confidence around is reflected both in stocks and in cryptos and in many other assets out there, right? So it's hard to find real safe haven assets. Of course, gold is always looked at as being one of them, but I also wanted to point out that, one of the Winklevoss twins points out that Bitcoin is better than gold itself. If you take a look at what he said, he mentioned that Bitcoin is better at being gold than actual gold, and not just incrementally, but by an order of magnitude or 10 times better. And whether you agree with this or not, right, I think the understanding that Bitcoin is becoming more and more a safer, strong performing asset, and an alternative to many other traditional financial instruments, really should be pretty clear at this point, right? I mean, also wanted to show you this article right here, where institutional investors plan to buy every Bitcoin price dip, and why is that the case? Well, simply because Bitcoin is super anti-inflationary, right? It's got very limited supply. That supply is going to shorten over time. It's already very small, and it literally is going to be like owning gold, right? It's going to be very hard to own even one Bitcoin eventually, and that's even what we're seeing now. So I expect that pattern to continue. Right now, Bitcoin is falling, could fall a little bit more, but overall, I think that in the coming year, 2 years, we're really going to see Bitcoin start to hold more steady and see less and less bigger drops and more steady upside. That should continue, to 1 trillion, 2 trillion, $3 trillion market cap very steadily there on after. So I really think that's what we're going to see for Bitcoin specifically. Not that other cryptos aren't going to do well, right? I think many altcoins have the chance to do well, including Ethereum, Cardano, many others out there can do very well. Some of them, of course, might die out, but overall, the crypto market is very young. However, Bitcoin has that advantage of being, the digital gold equivalent, and that's going to help it, endure the drops better, which is what we're seeing right now, and also increase probably more steadily after the drops, right? So, the stability in Bitcoin is nice, and I do plan on buying more Bitcoin in the coming weeks to months. You can also see the dominance of Bitcoin starting to increase again, moving back towards 60% of the cryptocurrency market cap. Now, going back to the SPY S&P 500 ETF, I use this as a general market overview. And, if we look at the actual performance here on the three major indexes for the US stock market, right, you can see that in the past month, we are red on all three of them, around 5%. In the past year, the NASDAQ is up a massive 30%, S&P 500 up 10%, and the Dow Jones is slightly red. But what I wanted to show is that, this increase in the NASDAQ, some might find it reasonable. I could really see that perspective, with companies like Zoom and that are benefiting from the situation right now. But you have to keep in mind that a lot of these tech stocks have been overbought and could be overvalued, and those are going to be the first ones to take some real hard hits, in my opinion, one of those being Tesla, for example. I think Tesla is going to see a pretty significant drop in the coming months. So personally, I'm looking to hold more traditional type stocks, right? Strong S&P 500 ETFs like SPHD, or real estate stocks like Realty Income. That's what I'm looking to hold, more traditional stocks that could endure these tougher times much better and then start increasing sooner as well, while still preferably getting dividends in the meantime. Think stocks like McDonald's, for example. So this S&P 500 chart is very key. I actually drew this chart out back during the initial dip, and you can see how accurate my prediction was on the bounce area. We bounced right around that $230 mark, and increased ever since on mostly a V-shaped bounce like I had drawn out. Right now, we actually put in a new all-time high, which is key because we peaked out around 350, 360. But if we look back here, right, we were at 335, 340 on the previous high. So we did put in a higher high. However, now we're going to see, can we continue some type of uptrend? And that could be hard, right? I'm not saying it's impossible, because if you look at this red line, this is our 200-day moving average. We are back above it. So we could continue to trend back above this and, move higher. But right now, with what I'm seeing, with the election coming up, I think that we're probably going to see stocks pull back. Now, on the plus side, I don't think it's going to be maybe as extreme, at least initially, as some people might expect. It's always very easy to think that we're going to go crashing back down to zero for both stocks and cryptos, but most of that time, that's very rare, right? That doesn't really happen in most cases. More, medium-sized drops tend to happen. With that being said, though, if we see a major market drop here for U.S. stocks, we could see the S&P 500 potentially almost lose half of its value, and that could happen to many stocks out there. Now, that's the ultimate bearish scenario, but not impossible in this circumstance. Right now, we're going to be looking at targeting some support levels, right? $300, that's one of the key areas. If we don't bounce off this 200-day moving average, we're going to see how we are able to hold around $300. If we move below that, though, we're pretty much guaranteed to move back to 232, 214. I'd say at least 214 after that. And really, right, if we pull this lower, I had already mapped this out, we're going to be looking at that $150 level for that ultimate dip. And the reason for that, if I can zoom out enough here, is because that 150 area is actually the previous breakout area of the S&P 500 that we never actually came back and tested, which leaves a pretty big open gap. So that is obviously can seem like a very extreme move from where we are now, but it's absolutely possible, and that would obviously shave off many stocks' value by about 50%, right? And I do think that's a possibility. I'm not saying that's necessarily going to happen, but it looks like we do have a fair chance initially here at heading back towards $200, and after that, getting to $150 is not that far-fetched. So keep in mind that there's absolutely more downside that is possible. But if you're holding good stocks, dividend-paying stocks, etc., like I mentioned, right, more traditional stocks that can endure these tough times, like Pepsi, for example, then you're really going to be able to benefit from hopefully lesser impact of the drop, getting some income dividends in the meantime, and dollar cost averaging. That's sort of my plan here. I'm probably not going to panic sell or anything like that. I'm probably just going to slowly but surely add at strategic times, especially when we see those bigger drops. I'm going to pull the trigger and buy some more, maybe stocks, dividend-paying stocks, and Bitcoin and other cryptos at these lower prices. That's kind of my plan. So for Bitcoin here, obviously completely different at the end of the day to the stock market, but like I said, the movement does tend to mimic a bit. However, I feel like the security in holding Bitcoin is pretty nice due to that digital gold kind of standard that we're seeing. Now, keep in mind, right, we can see some very crazy moves in the crypto space, so that's always something to remember. Cryptos tend to get these more extreme moves. It's nothing new, and it'll happen again. So that's always something to be, aware of and probably comfortable with if you're in the crypto space. But with that being said, if we look at Bitcoin here, it has been able to endure very well, right? It's got some nice stabilizations, some smaller pullbacks. Things have been moving up pretty nicely. In fact, I could actually go ahead right now and draw an uptrend line from here that's really been holding pace, right? And, I actually want to draw this one a little bit differently just to illustrate my point, but we'll keep it like this for now. Really, if we zoom in here, excuse the messiness of the chart, but what I had most recently drawn out is the fact that we are in this symmetrical triangle right over here, right? Let me clean this up a little bit for you just to make things a little bit more clear. And you see that I had drawn out here in green with the arrow that we're going to bounce up and down in between the symmetrical triangle. And then, we could either break to the downside of that or the upside, but I said, more likely that we break out towards the upside, start moving back to $12,000 plus, really heading towards that $15,000 key level, and that still seems pretty possible. So basically, the overview of this video is that, yes, we could see more downsides, especially for stocks, and especially for stocks that have gone up tremendously and that are maybe overvalued. For, some of the cryptos out there, we may not see as much downside as you might expect because cryptos already got a very, very big drop back in March, right, during that peak of the financial, scare. And that made them stabilize a bit more, where now, there's not that much downside for many of the stronger cryptocurrencies out there, especially Bitcoin, right? I'm really emphasizing that. And, as far as the stocks go, what I wanted to point out is definitely go ahead and take a look at stocks like Tesla. Look at the chart and try to find gaps, right? So looking at the gaps on charts is going to allow you to get an idea on where specific stocks might be heading, and gaps are left open after a stock either jumps up higher the next day above the closing price, or the inverse is, a gap to the downside. For those who don't know gaps and gap fill theory, make sure to check out my technical analysis master course. I got a whole video dedicated to that specific topic. The course is less than $20 and comes with a 30-day money-back guarantee, so we've got nothing to lose by giving it a try. We have over 114 students that have already taken the course, as well as 4.8 out of 5-star review in total. So great feedback. And, you're not going to find a course as good as this and as cheap as this on technical analysis. So make sure to give it a try. Link in the description of this video, and learn gap fill theory and what gaps are. But basically, right, these open gaps on the chart need to be filled. I've circled them in green over here on the Tesla chart. Tesla did have a very extreme move to the upside and has left many open gaps along the way that, in my opinion, absolutely need to be filled, right? We got one around $284, another one much bigger here, much bigger open gap on the chart around $230. This one absolutely needs to be filled, in my opinion, as well as one even lower around $170. So not only do I think that Tesla is going to go below $300, but I even think it's going to go below $250 and really, test that 200 level again, which is around where that 200-day moving average is circled in green here. That's this big red line over here. So that should be major support around that $200 level. And really, these gaps do need to be filled, especially this really big one here around $230. I really just don't see an option where that doesn't get filled. And, now is the time, right? I think this pullback could take a while, right? Maybe 6 months, even a year of pulling back here. And based on the indicators, it's not looking pretty, right? Everything is plummeting lower on the Tesla indicators. And keep in mind, right, over here, we have, for example, a open gap on the actual upside. So, could that get filled now? Possibly, right? It could possibly get filled now. If we end up moving lower before that, Tesla could then in the future move back higher to fill that gap above. But, either way, I think that Tesla can succeed long term, get to 500 billion plus market cap. But right now, I think its path is lower, and that's why I don't want to be holding tech stocks like this. I'm keeping, my stock portfolio based on long-term dividend-safe stocks, things like Realty Income, real estate stocks, McDonald's, those type of stocks, and, even Bitcoin, I'd say, or even, in a best-case scenario, physical gold and silver is really going to help you endure any type of downside the best possible, probably, right? So those are the type of assets that I'm looking at, much more safer assets, much more stable assets that have been known to endure the drops and that will probably endure the drop that's to come, because I do think we're going to see a bit more downside here. Maybe not as extreme on some assets like Bitcoin and some good stocks out there, but definitely many stocks here do have, and even cryptos, 30% downside ahead of them. Make sure to follow me on Twitter. Make sure to like and subscribe to this video. Turn on notifications. And also check out my technical analysis master course. Thank you so much for watching. Stay safe. I'll see you next time.